Good morning, everybody. It is Thursday, November the 7th, 6 a.m. over there on the East Coast. I apologize. I actually got a little bit of sleep, so I'm a little late today. What I have for you here on the screen are the S&P futures, the Dow futures, the NASDAQ futures, the S&P futures, and the Russell futures. And what I have is the 4-hour time frame. And as I was saying, as we were heading into election night, when we were getting the announcement that Donald Trump won, we were already overbought. Overbought on all four. Bang, bang, bang. Move into the 1 hours, slowly shifting over here. And again, same thing. We went into yesterday, overnight. We were already overbought. We were overbought heading into the elections. We were overbought. And yesterday, we were producing sell divergences. As you can see, the relative strength index was dropping. However, price was increasing. Is that actionable? Not necessarily. So I bring you on here to your email. I had a video out for you that was really quick yesterday. I had issues that I couldn't get it uploaded. I couldn't get into the email. Here we are, whatever. On the email going out Tuesday morning, the Trump wins trade. November 20th, VIX 19 or 18 puts. And I was slightly aggressive yesterday, telling everybody, yes, take your profits. Well, your profits were okay. Not fantastic, but they were okay. From your $1.55, you had around $2.40, about $1 on the trade. You spiked up a little bit better than $2.50 yesterday. And, even if you closed it out at the end of the day, you got about the same amount of profit as you got closing it out early in the morning. These are on the 18 puts. The 19 puts, relatively the same. And yeah, you had about 2.25 for your entry. Got up to around 347, so same amount as far as your return would go. And on the 15s, like I said, I wouldn't do the 15s. And that's why I wouldn't do the 15s. The 15s were trading right around 30 cents, more or less, for the better part of Tuesday. They dropped down even lower yesterday morning, and even though they did spike up there to around 50 cents, you just did not get the return and the security as you did with the 18th. So enough with that, because on Monday, or the weekend, I sent you out the preparation for the FOMC, and that's what I really want to go over with you right now. Again, I thought it was on Wednesday. Today's Thursday. So again, we're expecting to have their 1% remove, the 1% day over there on Friday, because after we had the drop down on Thursday, we got it. Boom, boom, boom. Great, fantastic. And again, what we were hoping for, me at least, was that we would be able to be perfect. We would get a drop down to that 56.75, 56.30, and then make our move upward into that 59.34, 60.40 area. Never got it. All we got was that 56.96, as low as we could get to there on Monday. So where are we? Well, I'll scroll down here because it's in your email as well, and here is where we start. FOMC day, Wednesday. It's not Wednesday, it's Thursday. As I shared, this will not be a normal FOMC day due to the election occurring Tuesday night. I was wrong. However, I'm also right. What we know is that FOMC days have been flat, dead zoned range until we get to 2 o'clock, 2:30. Then we get the zigzag move, and the real moves are when the question and answer begins at the press conference. That's after 2:30. Typically, around 2:40, 2:45, that's when we start to see a little bit. So this 90-minute window from 2:30 to 4 o'clock is not for the faint of heart.
Right. Come on.
The market is open 252 times a year. You don't need to trade every one of them. And today is one of those ones where if you have a job, if you have responsibilities that you need to be taken care of during this FOMC meeting for the end of the trading session, don't be involved. It's that simple. So the pattern that we know is that we go absolutely nowhere. And I have every single FOMC meeting you could ever want going all the way back to early part of 2009. Yeah, but what I have here is for you is your recent time that we have been in. And that is the key. This is recent time. Recent time being every day prior to November the 6th, going all the way back to November the 9th of 2020, that is recent time. That is Joe Biden. That is the algorithm that was in place for Joe Biden's policies. This is Donald Trump. Things change. The algorithm will change. There are going to be a significant number of changes over the course of these next couple of weeks. And that will take a little bit of time to adapt to see where is the Trump trade, where is the Trump dump. It's going to take a little bit of time, but as I mentioned to you already, and what I noticed here with the 82-point gap up off of the Trump one, and yes, Marge, obviously, the color coding for Trump, 5,900, that's got to be orange. 71.25 points. If you notice here, October 31, 72.48 points. If you notice back here, October 23, 72.44 points. That's been our top of the range, 76 over on October 1 on the sell-off to start October. That's been our range, 74 over here September 18th when we posted the all-time highs, 56.89. No, that wasn't it. We revisited the all-time highs from July from when Trump got shot. Yeah, right over there, 56.69 when Trump got shot. But when we had the sell-off starting, we were getting 100-point ranges, 100 plus, 100 plus. But take note of that. That's 72. 72. Look on your spreadsheet. You guys are doing this. Look on your spreadsheet. That 72 has pretty consistently been the maximum range that we're tending to get. On your QQQ, completely different story. Because as you notice over there, your QQQ did make it up to a new all-time high. A lot of adjustments that I'm going to need to be making, and I won't be making them until the weekend as far as Fibonacci retracements and where things line up. But going back to the SPX, everybody's looking for that 82-point gap and salivating about the gap fill that's going to come on that 82-point gap. This is a different algorithm. This is a different algorithm, and we need to pay a little bit of respect to that. So this isn't a blindly go out, buy puts that are 2-3 weeks out, and I'll get to you that I'll get to that in a minute. You don't do that right now because this is a brand new algorithm. But over here on the Russell 2000, as I was sharing that this is going to be the big winner. This is going to be the big winner. Trump wins. This is going to be the big winner. Well, you had a 12-point gap up. 12 points. And right back up to the old all-time highs. We're pennies away from the all-time highs. 5.95% move yesterday. But intraday, even though that 4.83 was really interesting, this has been brewing for 2 years. This move to the upside. So as of now, and as you already know, your 232.75 is your lows, with that 231 having been the trigger that we came up to already. Well, this is where you start paying close attention to your slightly less range that you're going to be getting for upside movement, and very, very, very respectable about getting involved for the downside movement on that. So over here on the S&P, as of the moment, we are at 5937.80. We are opening at, am I correct? Yes, we are opening at new all-time highs at the moment. This 5864.89, essentially your all-time highs. From prior, that is your support level, that 5863. So enough with this boredom. I will move you on to the charts and decipher this as best as we possibly can for you. SPX, looking here at the 30-day. Don't need to look at the 30-day. We can look at the 5-day, 15-minute. We've got that tiny little gap down there below that we couldn't get filled over here on Tuesday. Got our algo day, plus 1% to the upside, moving around, going nowhere. Then you have your big Trump gap. In fact, we can change this. We will change this to orange. Why not? Because that's your Trump gap. Very easy to see it, very easy to decipher it. Your zoom out, I should have left it on the zoom out. This here, your 58.45, which was your resistance, is now your support. But more significantly is this 58.65, right there where your close was yesterday. Or sorry, your open. Right there is where you have your primary support. Crystal clear, 58.65. So for now, and as far as you know, that is your bottom, 58.65. The angle of this, looking at this on a 1-hour chart, seeing nothing but green candles every single hour yesterday. Little bit of tiny bit too much. Come over onto your VIX, and I don't like the way this is. There you go. Your VIX, your big gap to be filled. That gap could take 9 months, could take 3 years to fill that gap. Your gap to be filled being back up there above that 20. As I said, we lose that 20 area, it's all over. And here we are down into the 1540s with 1450 down below. But yesterday we held on to that 1622 for some odd reason all day long, holding on that 1622. And we're slowly floating off here in the morning. So again, FOMC meeting, there is nothing to do. Nothing to do. Over here on the QQQ, new all-time highs, but we will move this into the week to date. And as you can see here from just a crystal point of view, the drop over here on the 487 on Tuesday morning. And it's just been an unorganized rocket ship to the upside. So no way to pull this out and try and start drawing Elliott waves. Same thing over here on the IWM. Come over here Monday, Tuesday, and then just your absolute rocket ship off of Trump. We can turn that into orange as well because we like to enjoy what we do. And that's your bottom. Your bottom right now is 233. There's nothing easier to say other than your bottom is 233. And get just playing around with your trend lines. You look over here at what was taking place over there overnight. And again, decipher it how you want to, but here we are floating right back up to that 239, looking at 240, 241 for the all-time highs. DIA, same thing. Change this over to orange. Have a good time. Same chart pattern, just everything getting stuffed into this to the upside. So, coming on to the bullish view that we dedicated ourselves to over the past week. Would have been great. Would have been great to get down to that 56.75. Would have been fantastic. Would have been able to trap a whole bunch of people thinking Kamala Harris was winning, and here we are moving to the upside. Well, looking at this from a wider point of view and what we are dedicating ourselves to be targeting, we should be looking for 59.91, more importantly, 60.40. That's what we should be looking for as a minimum for the upside move on this. So we're literally talking about another 100 points to the upside, likely to get at least another 50, 60 up here to this 59.90. And we'll go over, where that is when we get to the weekend because, again, not expecting any kind of drop whatsoever on this. This Fibonacci we can move just so that you can see what we're talking about, and being that this is definitely going to be changing. Yeah, again, even your Fibonacci retracement tells you that your support level is right there, that 58.63, 58.80 area. That's your support. So I wouldn't be thinking or considering anything below that 58.80, 56.83 area for the time being. Come over here onto, which one are we? This is the default. Yeah, again, just looking here from a chart pattern point of view, it's exactly what it is. So I'm going to pull this out. Should have pulled out quite a few times over my history, but it is what it is. And again, those numbers will change. This is our full moons. Full moons, excellent. New moon, that's right there, placed. Couldn't get more artistic than that. So here's our full moons. Full moon, full moon, full moon. And where we are, in our full moon window is we are heading into our full moon, which is going to be on November 15th. So buckle up, buttercup. This right here, for every intent and purpose, is going to be up there, like it or not, into that 6,000 region as we head into the middle portion of November. Very low odds that we are going to see it come down into the middle of November. But we'll leave it where it is. So, again, heading into the FOMC meeting today, I would not do anything whatsoever, nothing at all, until we get to 2 o'clock, and then we start looking. And prior to 2 o'clock, we start having a little bit of a gamble. And for everybody who knows what 230, 245 brings, if you don't, I'll send you back to Boardwalk Empire.
Do nothing. I beg your pardon?
You have no move, Mr. Thompson. You do nothing.
He's under attack, Arnold.
There's all the more reason for patience. I've made my living, Mr. Thompson, in large part as a gambler. Some days I make 20 bets. Some days I make none. There are weeks, sometimes months, in fact, when I don't make a bet at all because there simply is no play. So I wait, plan, marshal my resources. And when I finally see an opportunity, and there is a bet to make, I bet it all.